Since its founding in 2011, SoFi has been fixated on becoming a one-stop shop for financial services. By building up as many financial product offerings as possible on its member-centric platform that is primarily digital first, where speed, convenience, and content are the other core pillars alongside vast selection. Where ease of use, ubiquity, functionality, simplicity, and responsive customer service are prioritized to reach their long-term goal of providing the most convenient 24/7 service and phasing out the conventional mentality of financial service availability based on 9 to 5 Monday through Friday. After a rundown of the breadth of offerings to SoFi members, we'll highlight key parts of the company's business strategy. In the process, certain risks and potential opportunities are going to be outlined to illustrate the excitement and apprehension around SoFi and fintech companies in general. As expected, they have basic banking services with checking and savings accounts, along with insurance, estate planning, credit cards, and financial insights through SoFi Relay, which is intended to help with things like budgeting and credit score monitoring. Financial Insights supplies SoFi with data as much as they provide information for customers. SoFi Relay is said to yield unified intelligence, which could be interpreted as members getting more tailored product recommendations, while SoFi receives more data points on product performance and member behavior. On a related note, Financial Insights can also refer members to educational resources, which can then potentially point members towards other financial products and services offered by SoFi. Then there are loans that have their annual percentage rates regularly updated for fixed and variable rate loans, in addition to standard underwriting considerations like income, free cash flow, and credit experience. SoFi says a key element of their underwriting process is the ability to facilitate risk-based interest rates that they believe are appropriate for each loan using proprietary risk models through which they project quarterly loan performance, including expected losses and prepayments. SoFi has noted this data-driven process of risk-adjusted interest rates combined with data and monitoring tools is an integral part of being able to implement risk mitigation strategies quickly and efficiently, including underwriting standard adjustments to adapt their operations to changing environments and expectations. Likewise, data is put to use to give members a streamlined application process through automation. SoFi cites existing members generally experience a higher approval rate than new members, subject to the existing member being in good standing on their existing products. There is a whole list of loans covering personal loans, student loans, and mortgage loans. Within these categories of loans, there are subcategories for more specific types of loans, such as graduate and law school loans for those specific types of students. Overall, the lending process is in application and a digital borrowing experience, which SoFi points to as a competitive advantage because, as they say, digital lending is becoming increasingly ubiquitous. Their platform supports the full transaction lifecycle, including credit application, underwriting, approval, funding, and servicing. As long as a loan originates from SoFi and stays with them, performance data can be collected at each stage. This is referred to as a data asset. They also state the difference between the earned interest income and interest expense to finance loans equates to net interest income. It constitutes a vital part of lending profitability. The lending business has the option of pursuing a gain-on-sale origination model. It is defined by the company as when they seek to recognize a gain from loans and sell them into either their whole loan or securitization channels, or holding loans on their balance sheet when advantageous, thereby giving them the ability to maximize returns and balance their risk by earning interest on loans for a longer period and to be selective in sales arrangements. Investing offerings have the basics like stocks, ETFs, and IRAs, with additions such as automated investing and the ability to buy fractional shares, trade options, and do IPO investing. So basically, they have a fairly comprehensive suite of offerings, except for cryptocurrency and digital assets. Investing is on a mobile-first investment platform. Like everything else in their financial service segment, interactivity and engagement are a top priority. They take the form of features such as members being able to view and monitor other investors' activity on the platform. SoFi Invest has been called an attractive first product for members who may later become deposit account holders or borrow with SoFi. There are also segments intended for enterprises, which are not considered members. However, they are nonetheless contributors to the growth of the SoFi platform, alongside their own constituents who might benefit from SoFi products. Enterprise products and capabilities are primarily for financial services institutions that subscribe to SoFi's enterprise services and have become interconnected with the SoFi platform. Essentially, SoFi can provide technology platform services to financial and non-financial institutions, due to capabilities, for example, from their acquisition of Galileo in 2020 that aided in vertical integration across more of their financial services. Similarly, the Technisys merger in 2022 added a cloud-native digital and core banking platform into SoFi's offerings, enabling expansion of the SoFi technology platform beyond the main area of operations in the United States into Latin America. SoFi also operates in other regions, but not through their technology platform, namely Canada, along with Hong Kong through SoFi Holdings, Hong Kong Limited, and investment business. Technology platform services encompass an event and authorization platform accessed via application programming interfaces, and a cloud-native digital and core banking platform, in addition to services related to both platforms. SoFi states they earn technology product and solutions revenue through the use of the platforms, either on a per-use basis or from overall license and maintenance fee service arrangements related to those respective platforms. Other add-on technology solutions are meant to support clients and drive engagement. For instance, an AI-based virtual assistant for customers of banks and financial institutions, and a real-time payment risk platform to enhance payment fraud mitigation strategies for financial customers. In addition, one can find a host of small business financing options and SoFi at Work, a service they refer to as SoFi partnering with other enterprises looking for a seamless way to provide financial benefits to their employees, such as student loan payments made on their employees' behalf. In order to differentiate themselves, SoFi does those standard things like trying to be as low cost as possible, increasing selection, and reducing friction in accessing financial services compared to traditional banking and other platforms. To achieve these objectives, they concentrate on building vertically integrated technology platforms. One simple example of this would be SoFi Travel, which is described as a travel search and booking experience that can be managed directly through the SoFi app or website, alongside expanded member benefits, including member prices on certain bookings and additional cashback rewards on purchases made with SoFi credit card. Though the more interesting part of their strategy to attain a competitive advantage and really distinguish themselves is their use of member engagement and data. In a way, this is similar to what was discussed in the video about Instacart 2 weeks ago, where we learned they aren't simply a platform to facilitate online grocery shopping. They extended their capability to leverage their customer data mainly about shopping habits and preferences for the primary purpose of improving advertising opportunities for brands, which in turn helped their visible business on the surface improve the online grocery shopping experience. In this case, SoFi has a visible business on the surface with those product and service offerings we covered. Then they combine that with a social area within their digital application, which they call the member home feed. That's where members receive personalized content about what they must do that day in their financial life, what they should consider doing that day in their financial life, and what they can do that day in their financial life. Through this method, opportunities to build frequent engagement are created and has so far been an important driver of new product adoption, according to SoFi, that stated, "We strive to provide digestible financial education, meaningful answers, salient information, advice, credit scores, financial calculators, investment research, and financial news that enhance member loyalty and increase the likelihood that members will use additional SoFi products in the future." They go on to explain their aim is to create a best-in-class integrated financial services platform that will generate a virtuous cycle. In other words, existing members who have positive experiences will adopt new products and services, thereby lowering the acquisition costs per member once their lifetime value increases. The amplification of profitability from each customer is what the company refers to as their financial services productivity loop, which is and will continue to be a crucial part of their overall long-term strategy. The financial services productivity loop is intended to establish a sustainable competitive advantage. It is based on their belief that the friction people experience at financial institutions is caused by a disjointed and non-seamless product experience, a lack of digital customer acquisition, subpar mobile web products instead of digital native apps, and incomplete product offerings that fall short of holistically meeting all the financial needs of customers. To address these issues, it has been stated that attention is predominantly focused on regularly improving mobile technology and financial services products, with the ultimate goal of building a financial services platform that can support all of their members' financial services needs throughout their lifetime. Then in February 2022, they closed a bank merger by acquiring Golden Pacific Bank, a Sacramento, California-based community bank that is regulated by the Office of the Comptroller of the Currency and had approximately $150 million in assets at the time of acquisition. As a result, SoFi became a bank holding company and began operating as SoFi Bank. Becoming a bank holding company allows for checking and savings accounts, credit cards, and all new loan applications to be offered through SoFi Bank, which operates as a national bank, resulting in the potential to keep lowering the cost to fund loans, because as the company mentions, deposits held at SoFi Bank can be utilized to fund loans, which have a lower borrowing cost of funds than their warehouse and securitization financing model. Moreover, they also point to the possibility of increasing their flexibility to hold loans on their balance sheet for longer periods, enabling interest to be earned on loans for a longer period. This could also improve a source of data about members. Overall, SoFi faces extensive competition in each of the segments it operates in. In this respect, the inherent advantage of comprehensive selection carries a natural drawback. The lending segment presents competition from other banks, credit unions, and specialty finance lenders, as well as alternative technology-enabled lenders. Then it has been admitted that despite now operating as a bank with SoFi Bank, many other banks are larger, have been in business longer, and often have greater brand awareness than SoFi. And that some large technology and retail companies have large consumer bases and strong balance sheets, which could enhance their competitive ability when acquiring deposits. It is a similar story with investing, where the leading brokerage firms are also larger, have been in business longer, and generally have greater brand awareness than SoFi. Furthermore, technology and other companies have begun to offer some basic investing features and the ability to buy and sell digital and other assets. Competition extends to the area of member engagement, namely through the member home feed, where attracting financial services content viewership can also be accessed through many sources of financial news that are established and have a larger subscriber base. Such competition is actually quite relatable for this channel. If you enjoy this kind of coverage of companies, please like and subscribe to support more content in the very near future. It takes a lot for a video like this to get to viewers, so if the algorithm sees engagement, we all benefit. Finally, SoFi explains the possibility of even greater competition from larger institutions that may invest into an integrated platform as a service solution or to a cloud-native digital and core banking solution, resulting in undercutting SoFi's pricing. To address the vast pool of competition, SoFi employs marketing that concentrates on boosting brand awareness and improves member acquisition efficiency. These efforts are not only meant to draw in new members, but also retain existing members with extra engagement. Campaigns can get considerably creative and have extended to involving media personalities, celebrities, and partnerships such as with the NBA. There is also no shortage of marketing channel variety, with a wide scope ranging from TV ads and pre-approved direct mailing to search engine optimization and social media. At the core of marketing content is the desired acceleration of the financial services productivity loop, which is constantly being analyzed and optimized. Now we get to coverage of laws and regulations, lots and lots of laws and regulations that can and could apply to SoFi and its competitors. The Bank Holding Company Act, Truth in Lending Act, Community Reinvestment Act, and Dodd-Frank Act, to name just a few. Additionally, consumer protection and especially emerging privacy and consumer information security policies have the potential to limit the scope of marketing efforts and data handling, mainly through restrictions on data collection, sharing, and how data can be used in relation with third parties. A good example of regulations affecting SoFi relates to the absence of access to cryptocurrency and digital assets in their investing segment. The explanation is as follows, with a light dose of legalese. The approval as a bank holding company in February 2022 meant the Federal Reserve determined that the activities of SoFi Digital Assets, LLC, in providing members with the ability to buy or sell various digital currencies through SoFi Digital Assets, LLC's omnibus account with a third-party custodian is not a permissible activity under the Bank Holding Company Act and Regulation Y. As a consequence, the decision was made to transfer the crypto services provided within SoFi Digital Assets, LLC, and to close existing digital assets accounts. The process took place from the fourth quarter of 2023 to the first quarter of 2024. Navigating the maze of laws and regulations definitely presents extra considerations on top of just competitors. How SoFi deals with these challenges will be as much about compliance as it is about the success of its financial services productivity loop and marketing. Now, would you kindly please stay tuned for more and check out coverage of other companies while you wait for the next one?